Bowler Metcalf has two divisions, Bowler Plastics and Quality Beverages. Quality Beverages produces niche soft drink brands such as Jive and Dixie. Bowler Metcalf has a market cap of 556 million rand and a dividend yield of 5.5% and a price to earnings ratio of 7%. Your thoughts on Bowler Metcalf? You know, that's even smaller than the other two that we've just spoken about.
Not a bad little company. You know, we had a client over the years who did a lot of research work himself, and he always looked for companies that had good internal ratios, things like, you know, the rate at which they increased their return on equity, the way that they managed their business internally, and so on and so forth. And Bowler Metcalf always came up looking good by those measures. They also had a CEO a lot of people liked, Michael Brain. I know he's just retired, and an interesting decision they made to actually get into the juice and soft drinks manufacturing business at the lower end, because they were involved with manufacturing the containers, and then they got an opportunity to do the filling, and then they decided to launch their own stuff. So it's a company that has actually done extremely well over a period of decades, but seems to have stumbled quite significantly in recent months.
Looking at earnings, they're expecting a drop in earnings of about between 20 and 27%. Your thoughts on Bowler Metcalf, given that Paul has said that we have seen a bit of a run on it, it's been doing quite positively, but now falling off?
Well, I mean, if you look at Bowler Metcalf's earnings over the years and years, they basically have seemed to be bulletproof, increasing earnings nicely every year. I think one of their strengths is in their specialization in the packaging space. That's what sets them apart to a degree. Recently, they've had some problems in that space. They had decent earnings growth, but flat profit growth. I think that shows the problems with the input costs, not being able to manage that. Maybe, perhaps, they didn't mention it specifically themselves, but maybe like Astropac mentioned, that shortage in polymers, maybe they've also been battling with that. What I'm not mad about this business in terms of a strategy point of view is this move almost downstream into the actual soft drink space. They've been predominantly in the Western Cape. Now they're moving into Gauteng. They're building a factory there, so that's costing them. And the drink space is a very difficult space. I mean, if you look at Pioneer, who's at Pepsi, and they've got Ceres. I mean, they can't. I mean, they've been trying for ages to gain traction in that space with a brand name like Pepsi. So also, if you look at AVI's recently sold, I think it was Real Juice or Sir Juice, to Clover, and Clover's strategy is lowest prices. So, I mean, you're seeing some real competition in the space, some real pricing pressure, and I don't like the space, especially for a packaging company. I think you can basically contrast that to Transpaco, where they said, let's specialize in what we know and go into the paper side of packaging. Bowler seems to have said, well, let's specialize in something else because we're not so sure about packaging anymore, let's go into soft drinks, which I find slightly disconcerting.
Your thoughts on their strategy currently, Paul?
Yeah,
so they
make
the bottles, they package them, and then they actually fill them with the cold drink.
Yeah, look, they're talking about the kind of lower-end fizzy drinks that look as though they're made from nuclear waste and make your tongue turn purple. But I think what happened here is when they started doing that and when the results were still looking good, the market gave them the benefit of their doubt because of this great historic track record. But I guess there's a bit of anxiety creeping in here. I think the shareholder structure, though, is also still fairly tight. The Sass family and the Bowler family still own quite a significant portion of this, old Cape Money families. So I don't quite know, maybe just a few marginal sellers here. But I don't know. I mean, like I said, this is a tough industry, import substitution, rand sensitivity, tough markets, certain consumer products, very competitive. You know, you talk about Coke, Pepsi, all this kind of thing, and that's really the truth across the entire industry.
So a lot of competition. I don't even know if I should ask you whether hot or not.
No, I'm afraid not.
Not hot. Daniel, hot or not on Bowler Metcalf?
So Bowler's track record in terms of their packaging side has been stellar, and I think to judge them unfairly on one drop-off would be unfair. It does worry me going into the soft drink space, but that space is basically making no profit at the moment, so it's not like they're making profit and I'm worried about that coming off. What does worry me is the amount of capital they're pouring into that space, and you could end up getting a very low or no return on that capital. But having said that, I think it's possibly an opportunity at this stage to buy into the stock, because if you look at the share price, it's just going like that, and now it's come like that. Maybe it's an opportunity if you believe that they can get the packaging back to where it is and turn something good out of this soft drink story. So I think it could be an opportunity, and I'd say hot.